Term sheets for acquisition transactions are particularly important to focus on. The first key term in an acquisition term sheet is the structure. The structure of the transaction is driven by both corporate law and tax considerations. The key to remember is that there are significant differences between a merger, of which there are different types, an asset purchase, or a stock purchase for both the acquirer and the target. So it's critical that you consult with your attorney before agreeing to the structure. The second key term will be the consideration. The term sheet should specify the consideration to be paid by the acquirer, including the type of consideration, whether it's cash, stock, assumption of debt, or something else, the amount, and when that amount is determined, and whether that amount gets adjusted after the parties have closed the transaction, the timing of payments, in other words, do you get paid at closing or over time, and if the latter, who holds the consideration in the interim period, and the payees, in other words, who receives the consideration and how is that allocated. A third key term for any acquisition is indemnification. The acquirer wants certainty that it's getting what it expects, so the definitive agreement will contain detailed representations and warranties by the target about the business that's being acquired. The acquirer also wants recourse if those representations and warranties turn out to be inaccurate. So the primary purpose of indemnification is to give the acquirer this comfort. Another provision that is frequently addressed in a term sheet for an acquisition is retention. The acquirer wants to ensure that the target's team is incentivized to continue with the company and help grow the business. So to summarize, 4 important terms to consider in an acquisition transaction would be the structure of the transaction, the consideration to be paid, the indemnification provisions, and the retention of the target's team.